Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The Talking Point today is about JSW Energy's view on the space at large, especially after the fourth quarter numbers which came out on Friday. And you could argue that, yes, there was a modest decline in revenues and reported revenues of 12% YOY. So I typically believe that we should look at numbers on a QOQ basis. But having said that, a 12% decrease in revenues on YOY basis, some bit of increase in finance cost as well. But there were some standout points. One, for the space at large, as the economy opens up, our consumption moving up, does that augur well for JSW Energy? They have, of course, announced a fairly large capex plan as well, and that shows the confidence of the business, of the management in the business. And of course, if you just look at a very small nuance in the numbers, it's increased its capacity under long-term PPA to 86% versus 81% as of March 2020. So a few positives. Lots of questions about the future. Let's get in Prashant Jain to talk about all of that. Prashant, great having you. Thank you for joining in. I hope all is safe.
All good, all good. Thank you for having me, Neeraj.
The pleasure is ours, Prashant. So, well, you can choose to put the quarter or the first or the second half into perspective. And I'm wondering if as the economy is opening up in the month of June, is there a telltale impact on conversations and demand within your projects?
Okay, so I'll first take up the question on revenue, which you made. The point is that actually revenue we need not to see year on year, because prior to July 2020, we were supplying a total power where we were sourcing the coal and supplying to our customers. But some of our customers, they moved into the job work contract post July, so they are sourcing coal and get it converted into the power, and that's why you are seeing the decline in revenue when you are comparing year on year. But on a EBITDA basis, that's why there is no impact on the company, and you are seeing the EBITDA margins have gone up. Now, second is that in terms of the power demand, last year, post-pandemic, we have been seeing the consistent power demand improvement, and which we saw, like in quarter 3, there was a power demand growth was 6.3%, and quarter 4, it was 8.4%. In the current quarter, till May, for April and May month, the power demand went up by 21%. And in the month of June, it is up by 7%. So you will be seeing something around 15.5%, 16% demand growth in the quarter 1. But it was on a lower base as compared to last year, where you saw a significant lockdown in the previous year. But I am quite confident that power demand, people will be surprised this year. This will be in the range of 7 to 8% growth. But on a consistent basis, I am quite optimistic for next 10 years, you will be seeing 5 to 5.5% power demand growth, which you saw in previous 20 years. It's good now.
Okay, great. So Prashant, I was asking you about how do you see the year shaping up as the economy opens up?
So I'm pretty confident about the current year power demand, which will be in excess of 7.5% going forward. And so power demand will be pretty good. And then going forward also, I will be seeing that 5 to 6% power demand growth will continue.
Okay, now internally, Prashant, the few changes that you're bringing up, as I said in the introduction as well, that 86% under long-term PPA. What's the stance? And then I would, of course, want to come to the larger point of capex and how do you see that shaping up? Because you announced fairly large capex, an aggressive one over the next 10 years.
So we have been keeping a stance that we have been decisively moving out of the merchant market where we were at close to 60% 3.5, 4 years ago. Now today we are at 86%, and we will be further tying it up. And next 2 years time frame, I am seeing that we will be tying up close to 98 to 100% of capacity will be totally PPA tied up. So our stance is that we would like to be consistently in a long-term PPA tied up capacity. And all of our incremental power demand growth will also be coming up with the long-term PPA tie-up. Neeraj.
Sorry for that, gentlemen. Prashant, very sorry for that. But anyways, now to the 2 or 3 key critical points that I wanted to ask you, Prashant. One, in a manner of speaking, everybody's talking about the big entry done by Reliance in this renewable space, right? With what they announced at the AGM. Now, can you tell us a bit about what does this signify for the kind of offtake or the opportunity that exists for the space? And how does this impact anybody who's targeting a large foray or a large presence in the renewable space? Because everybody knows that, of course, every good businessman is able to chart his own course in India, but Reliance coming into a space does create news.
Yeah. No, it's a welcome news in a real sense for us, because the way I have interpreted their announcement, they are coming in a big way to manufacture solar panel as well as the battery equipment and electrolyzers, fuel cells. So they are going to, produce solar panels, and also lithium-ion batteries, providing that as a solution along with a financing vertical on an EMI scheme for a rooftop and agriculture users, which is primarily is the market wherein Tata Power is operating. The company like us are operating on a grid solution, supplying power to the DISCOMs and SECI and NTPC of the world on a long-term PPA for 25 years. So we are actually seeing ourselves as a customer of Reliance or Adani or Tata, who are setting up a large solar panel manufacturing capacities under the Made in India scheme, where the government of India has announced a PLI scheme also. And so for us, our import dependence will go down on China, and we will be able to source it at a competitive price, as Reliance is mentioning that they will be supplying these solar panels at the world lowest cost, and which is going to benefit us significantly. And in turn, we will be able to produce power at the lowest tariff in the world and then supply it to the DISCOM, and which will eventually help DISCOMs to improve their financials. So we are quite optimistic in that aspect, and we are really looking forward.
Okay, interesting. The other question around this, Prashant, is the targets that you set for yourself. Now, when I look at the plan, and please correct me if I'm wrong here, but when I look at your plan, it's nearly 4x the renewable capacity by FY30, if I'm not wrong, right? And I know a fairly aggressive target by FY25 as well. Tell us a bit about this. how would you reckon the offtake would be for all of that capacity? Because I hear almost everybody from a small to a mid-sized to a large player talking about fairly aggressive capacity expansion in this space.
So we are in this space for quite a long time, Neeraj, and if you see that last 4 years, we have been delivering our balance sheet because we have been looking for a price stability and a right opportune time. And now we see that there is a right opportune time. That's why we took a plunge into it. And we generate close to 2,200 crore of the cash profit, which we have been using to deliver our balance sheet now. That will be used as a equity to fund our future growth. So with that cash profit, without any need of any equity, we can set up close to 2 gigawatt of a capacity every year. And with that in mind, we have put a plan of 2,500 megawatt, which is under construction right now, which will get commissioned in next couple of months, because it's starting from Q4 this financial year, wherein we will be commissioning close to 200 megawatt every month. Around 150 megawatt will get commissioned, and this entire 2.5 gigawatt capacity will get commissioned by June 2023. And we have also built in a big pipeline by locking in various resources. When I say the resources means we have locked in a lot of wind and solar sites where we will be doing necessary PPAs with the SECI, NTPC of the world, and then we will convert them into the reality. If you look at the size of opportunity, as I said, that if the power demand is growing only by 5%, then you are talking about close to 30,000, 40,000 megawatt of the incremental capacity of renewable, which is required. Because the moot point here is that in renewable, the PLF is only 32%, and which is 1/3 of as compared to the thermal capacity. So of 35, 40 gigawatt of incremental capacity, which is required annually, if I'm talking 2 gigawatt, it is less than 4%. So we are going to operate into the niche segment, and that's why we are going to be very, very conservative and choosy. And with our cash flow and with our balance sheet and with the kind of a resources which we have already logged in, we believe that this is a very conservative target, wherein our capacity growth will be close to 18-20% for next 10 years, and our EBITDA growth will be also in the similar kind of a range for next 10 years.
May I ask you an investor question, Prashant? And that is, I'm sure you must be talking to some of your larger shareholders, right? And I just wonder if there is a belief that over time, because again, the price that you have, the stock price that you have is also a currency of sorts, right, for you, for multiple uses. Do you get a sense that as more and more capacity on the renewable side comes on stream, the multiples due to better ESG scorecard would help you meaningfully? Are people also telling you about this as you look to chart off your course? I'm not saying you're doing that to get higher multiples, but is there a natural outcome that people tell you about?
Yeah, absolutely. If you look at the power company used to trade close to 7-8 times of the EV EBITDA multiple, but the renewable companies are trading between 25 to 40 times EV EBITDA multiples globally. And I'll give you one color. Since the Joe Biden came as a president of the United States, the normal carbon credit which we are having, and I used to sell my carbon credit at 7-8 cents US cents per carbon credit around 10 months ago. Today I'm selling it at $1.5. So I'm talking approximately 20x increase in the carbon credit pricing. That's what is happening globally in the world, and that's what is you are really talking about. And same has happened with the renewable multiples also. But so the world is changing, and world is really talking about it, and probably it is going to happen at some point of time in India.
The flip side to this argument, Prashant, and I would want to understand your view, is that the skeptics, I mean, I have to play the devil's advocate, right? So the skeptics say that the kind of the tariffs that are there for the solar plants, so the solar side, would not be comparable to, say, for example, the extant portfolio that you have, and therefore that would pose a challenge to the kind of growth targets that companies set for themselves? Now, obviously, your growth targets and the kind of upticks that come into profits, etc., are large. But could this be a spanner in the wheels?
And not really, because power tariffs have been coming down and they will remain. I feel that if I give you the color, the entire national India average power price delivered to the discom is 4 rupee 30 paisa, and that has been primarily the thermal power and hydropower. And this renewable power delivered to the customer, I mean the discom, is below 3 rupees at this point of time. And that's what the incremental change which is happening to the discom's health, because their sales price is increasing, whereas on the other hand their power procurement price is coming down. So it is a natural improvement in their cash flows. So going forward, power tariffs will be benign, not because of the competition, but because of the change in the technology. The kind of efficiencies you were seeing in the renewable space is remarkable. I was looking at a 1 megawatt turbine, and now onshore the turbines are 8 megawatt. For a same location, if you can set up a 8 times capacity, you can imagine the kind of a size of a scale which it brings in, and then it reduces the cost of power. Offshore turbines are now 13 megawatt. Same is happening in solar power panel efficiency. So a lot of technological innovation development which is taking place in this particular sector, which is going to change the complete direction where we are in today. And I think the world is changing at a faster pace than each one of us thinking about. So it's rather going to be a tailwind than a headwind.
Yeah, and I must say, some people say that how is it that companies are thinking of signing 15-year agreements when you don't know that 15 years out, can some other form of power come in and replace this as well? But having said that, Prashant, and you may want to answer that too, but I would want to wrap up this interview with 2 questions to you, because we've taken a fair degree of your time already, but 2 questions to you. One, so for example, people believe that you might clock in from about 8 billion of profits in FY21 and profits growing about 6x over the course of the next, say, 8-9 years over this decade, etc. If these are realistic numbers, what are the challenges to this, aside of course power consumption not picking up because economic growth doesn't pick up? I mean, who knows? But what are the challenges aside of that? What are the challenges to this? And is there a possibility, or are there possibilities existing which may actually enhance the prospects of growth for you? Because as of now, everybody's penciling in fairly strong growth for the space at large and for you in particular, simply on the back of your track record of having grown very well while managing your balance sheet very well.
So it's a later part mostly because, I see that these numbers have been really conservative and without any need of any fresh equity, because we are generating quite a lot of free cash. And in addition to that, we have last 4 years worked very aggressively in locking in our sites. Today I'm having already acquired 2.5 gigawatt sites and locked in another 3 gigawatt, and another 15 gigawatt is under work in progress. So we are looking at 20-25 gigawatt of the sites and resources totally locked in the next 24 months time frame, having enough cash flows and competitive strength. My interest cost is the lowest in the country in the private sector, and with the kind of a balance sheet size, and we will be able to do much more aggressively than what we have chartered at this point of time. So I think these numbers are going to be proven to be conservative in terms of EBITDA growth as well as the profit.
You believe 6x growth over the decade is conservative?
Correct.
And it's fine. I mean, it's fine. Okay, correct. I like that confidence. Okay, you believe there are upside risks to that. Would that be back-ended as the larger portion of your growth comes in the next half? Or do you reckon that is difficult to say?
See, I'll tell you one thing. It's an interesting perspective I'll bring out to you that, we are having, people look at my ROEs, and you are talking about 800 crore or $8 billion is my 8 billion rupees is my total net profit. But my depreciation is 1,200 crore. My repayment is only 300 crore. And because my residual PPA life is 20 years. So that incremental 900 crore is to be added, and you need to see that way the free cash flow. And on top of it, in my return on my total net worth, 4,500 crore is the shares value of JSW Steel, which is not earning any return. So actually, my pro forma net worth is only 10,000 crore. So I am generating 16 to 17% return on net worth on a consistent basis for last 4 years, and which I am going to improve going forward. That's the point number one. Point number two is our net debt is 6,200 crore. We are having, non-strategic investment of close to 5,000 crore, and on top of it, net current assets and loans and advances. Actually, our company is a debt-free company.
Debt-free.
Power company being a debt-free, having locked in on the resources, and our track record is we are lowest O&M cost power producer in the country in every segment. We are having lowest interest cost rate, in the sector, lowest gross block per megawatt of power in the country. So with our execution skill and everything, there are positive surprises. Of course, the lion was sleeping for last 4 years. Now it has waken up, so you will be positively surprised.
Very, very interesting here. And therefore, you believe that this whole target that you have set for yourself, you'll be able to win PPA wins at very reasonable or better than reasonable rate of returns as well, despite the competitive intensity.
I'll give you another color. This 2.5 gigawatt, my average tariff is, blended tariff is 3.31 rupees. So we are operating in a niche segment. We have been looking at not a very competitive market. So we look at sit back, relax, and look at the right opportunity and taking the target. That's why I explained that we are looking only 4% of the opportunity which is available annually. So we would not like to take over the growth for sake of growth and going very rapidly. Our targets are only one, that we would like to be the lowest cost power producer and highest rate of return.
Okay. Well, one thing I'll say for sure, Prashant, which is keep up the good work, because you managed to get growth at a fairly amazing clip while managing your balance sheet in a really good shape, and with all the nuances that you've spoken out. I hope that growth comes even faster to you and you do even better work in the decade to come.
Thank you.
Lovely talking to you today. Sorry for the small glitch, but the second half of the interview went very well. So thank you so much for that, and look forward to talking to you more often.
Thank you.
All right, viewers, thanks for tuning into this edition of The Talking Point.